Welcome back to the show. Let's invite Prakash Diwan on our show now to tell us about all the stocks that we need to watch out for as we head into the brand new week of trade. Prakash, hi, good morning. We were just speaking to Lawrence Belanco of CLSA, and he's mentioned that there is a further upside of 15% that he's looking at in the mid-cap space after the breakout that we've seen in the last fortnight. If that takes place, then which are the stocks that one can look to buy now, where there is both perhaps valuation as well as growth headroom?
Good morning, Sonia. So, I don't have a ready list, to be honest, for this answer, but I do agree that the kind of reset that most of these mid-caps, especially the quality names, are undergoing, given the earnings, strength, that's likely to propel, as you rightly said, a softness in valuation, given the fact that the E is growing in that PE, and very clearly, visibility of earnings is getting stronger. I'll make it easier by at least listing out the fact that there's some of these very clear pockets of promise that seem to be emerging after the numbers have been digested. So, you have cap goods, ancillaries within the cap goods, which is downstream businesses, not the likes of L&T and KEC and all, but I'm saying equipment manufacturers, suppliers of critical equipment. Then you have a lot happening on the renewable side. So that's another area that is getting revved up very clearly. And then, of course, auto ancillaries, which is one of my favorite pockets to look at. Now, we've been seeing this whole emergence of OEMs, re-emergence of OEMs getting the strength from the demand side and the supply, pressure easing on the chip shortage and all. Now, if that were to actually continue playing out, and which I think it would, you'll probably see a lot of the good names which are under-discovered of sorts do well. So some of the good names that are very well known, so one of them is Motherson. I'm not talking about, the global business. I'm talking about the India harness business. I've been talking about that, how it will start playing a very critical role in terms of, percentage of contribution to the electric vehicles, while the IC engine vehicles also continue to attract a lot of revenue generation for them. The other name that I've seen in recent times, and the last con call was so clear, is a company called Uniparts India. I mean, it's a very unique business. Because it supplies a lot of critical assemblies, sub-assemblies to off-road, equipment, whether it's in defense, it's in agri, construction. So, these are businesses that are hitherto under-discovered of sorts. Sonia, what's going to be very critical is if you have the patience to hold on to some of these businesses which have come into, let's say, the public domain in the last few years, you will see the trajectory and the visibility of earnings getting more cemented. So that's what you'll have to do. But I do agree, the quality mid caps is where a lot of money will come in rather than chasing, the nifty stocks at an all-time high. Because there is hesitation very clearly, given the volatility and the events around this. Particularly this week is too heavy on events. So I'm not too sure whether the Nifty will see moving the needle too much. But a lot of the mid caps will definitely see buying continue.
All right. Prakash, hi, good morning. Just wanted your names on IEX, which is down 20%, 22% in the last 2 days. And then CMS Info, I don't know if you track the stock. We had the management with us sounding very confident, but there was a large block and the stock ended about 6% lower. So quick thoughts, IEX and CMS.
So I'm not too familiar with the CMS infosystem, fundamentals at this point. But yes, IEX, of course, we've discussed this earlier also. There is no reason why there would be any let-up in the competitive intensity. I mean, there is this whole debate whether, the new regulations will kind of, put a lid on the kind of growth that IEX has. But I think, it's very simple. The coupling thing which we are worried about, or the market is worried about for IEX market share growth, is something which is a natural progression. I mean, you have more players now. There was a time when IEX didn't have any competition. So, from that stage, the government also realizes that you need, for a regime which is fair and equitable, you will need, regulation which support that. So I think IEX will face downward pressure. There are people who probably believe it could do very well even in that tough environment. But my belief is it will probably have to go down before it goes up.
All right, Prakash, I wanted your thoughts on Sonata Software, which has been one of the strongest stocks in the last 1 year. A year ago, Sonata Software was, I think, 450 rupees, and now it's 1,000 rupee plus. So let's do one thing. Let's get the management going first, and then we'll come to you.
Let's get back to Prakash Diwan. Prakash, before we went into that break, we were having that chat with you about auto ancillaries. Now, we've got news over the weekend that after many, many quarters, some of these steel companies are getting a price increase from the auto sector. So if demand is good from the auto sector, then volumes will pick up. And now they've got a pricing tailwind, at least for the first quarter. From second quarter onwards is likely to be revised downwards yet again. How do you approach them? From what I know, JSW and Tata, from the large names, they have 15% exposure to autos. And from the smaller names, Kalyani as well as Vardhaman Specialty Steel.
Yeah.
Any view on any of these stocks?
Also, absolutely. In fact, Nigel, I'm glad you took this up because, even the kind of build-up that we are seeing in cap goods is finally leading to a lot of high-end engineering and EPC execution, which will involve a lot of steel demand, which is pent up. And while you have, the headwinds in the global market in terms of restocking, especially because China has not been able to rev up in that sense, it's going to be a very nice spot to be in. And let me tell you, steel is something which people have stayed away from in the last couple of quarters. But the likes of JSW Steel, of course, has the JFE vertical for auto, steel, specialized auto steel. But I would look at Tata Steel as a much more balanced, portfolio in that sense. Not just rely on a little bit of an uptick from the sector, from the auto ancillary sector. But overall, if you ask me, among the largest steel players and one of the safest names to go with, if you were to play this for the next couple of quarters, Tata Steel has a huge upside in the offing of sorts. It's a reset which will happen. It's a very clear risk reward that's kind of getting to be too favorable. So if any FI inflows continue to chase large caps, the non-ETF funds, the active funds, I don't see any reason why steel will not see a build-up, particularly Tata Steel at these valuations. So it's one of my favorites at this point in time from a tactical perspective, not necessarily, very long-term view because things would change dramatically in that sector. But at this point, a great balance sheet, pent-up demand, and the ability to continue supplying low-cost products to the rest of the world is what Tata Steel is offering.
All right. Well, just stay on, Prakash. We'll come to you in a bit.
Prakash is with us. Prakash, any thoughts on Quest Corp? And do you track HBL Power? Was the big winner last week, up some 26-27%, Friday to Friday.
Oh, absolutely. HBL has been, some sort of a very positive, very salient kind of a play in the making. And what's triggered this sudden move in the last couple of months has been that there's a huge absorption of the limited floating stock that's available. I mean, I can see, probably very soon I'm anticipating that some of the new institutional investments that would have come in during the quarter will start reflecting in the SHP. But interestingly, on the business side, they always had a very promising portfolio of the battery thing. But here there's a lot of the other optionalities that have started playing up, including the Kavach, the rail system. So there is huge salience, there is huge scalability. The only risk that everybody talks about in this is what happens in terms of the succession from the current set of management. So, that's probably an issue that you need to kind of look at. But otherwise, great balance sheet, great business profile, absolutely stunning product lines. But it's run up, so you might have to kind of, look at your risk reward a bit separately. But definitely in the long run, it will pay off.
Okay, all right. Thanks a lot, Prakash, for joining in this morning, discussing all those stocks. But I'll